BP up now by 1.8%, Chevron up 1.5%, EOG Resources up 3.9%, and Pioneer Natural Resources up now by 1.9%. Spot gold up 0.3%, $17.92 the ounce. Gold up now by $5.10. So again, recapping, equities are trading mixed. We've got the S&P 500 index down 11 now, a drop of 0.3. The Dow is up 0.3%, Nasdaq down 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Kriti Gupta live in the Bloomberg Interactive Brokers studio. These stories continue to come out of China. We are fortunately joined by Andy Brown, editorial director at Bloomberg New Economy. He joins us on the phone from New Hampshire. Andy, your Saturday Bloomberg New Economy newsletter, you write about after President Xi Jinping came to power in 2012, he made it known that he wanted to turn China into a soccer superpower, host the World Cup, and win it. Responding to that challenge, some of China's richest tycoons developed a passion for the, quote, beautiful game, and they splashed out on soccer clubs and star players. But today, the fortunes of the tycoons who sought to curry favor with Xi, they are sinking fast. What's going on?
Yeah, so this is a sort of a little morality tale, if you like. As you just note, Xi comes to power, and he wants to turn around Chinese soccer. And some of the richest tycoons in China decide that they want to ingratiate themselves with him by investing massively in soccer, the game, both in China and overseas. And they set up clubs that attract players from the top clubs in Europe and Latin America. And the best example of this, a prime example, was Guangzhou Evergrande, which was set up by Xi Jiayin, the chairman of Evergrande, this massive real estate conglomerate, and Alibaba's Jack Ma. So this whole effort has basically blown up. The Chinese men's soccer team is about as pitiful today as it was when Xi Jinping took power. It ranks something like 71st in the world versus 77th when he took over. It's just about to crash out of the World Cup qualifiers, lost 1-0 to Japan. Meanwhile, billionaires as a class are out of favor in China, and in particular, Jack Ma is in trouble.
So what is the international reaction to this? I mean, you talked about one in your column, I should say, one foreign signing, such as Colombian striker Jackson Martinez. So, I mean, people know this is happening. What has the international fallout been like?
This is really, apart from the fact that China is not the global soccer superpower that Xi Jinping hoped it would be, this is really a domestic story where Xi Jinping is now decided that he's seen enough of the obscene wealth being generated by a relatively small number of billionaires in China, although a number that is increasing very rapidly. And he wants them to give back, and they're being shaken down for billions of dollars to promote what he calls common prosperity or a more equitable society.
So, Andy, connect this to what's happening with the Evergrande crisis as it escalates, as protests break out across China. The group is facing mounting protests by homebuyers, retail investors, and even its own employees, raising the stakes for authorities in Beijing as they try to prevent the property giant's debt crisis from sparking social unrest.
Yeah, this is a different aspect of the crisis. This is the government deciding that it wants to rein in the debt of China's biggest property companies, and it's taking out a swath of billionaire profits and wealth. The latest billionaire couple actually to run into trouble, the husband and wife power couple, Zhang Xin and Pan Shuyi, the co-founders of Soho China, which is one of China's primary office and retail property developers. They had tried to sell their company to Blackstone, Stephen Schwarzman's Blackstone, for $3 billion. And that deal then got stuck in an anti-monopoly review, and for reasons that are still unclear, but probably not unconnected to that review, which was going nowhere fast, Blackstone and Soho pulled the plug on Friday. Today you saw China shares in Hong Kong plunge something like 40%.
I want to ask you about why the American investor should really be paying attention to the story going on thousands and thousands of miles away, connected to us for those of us who are unfamiliar.
Well, for two reasons. Firstly, because China is now a major investment destination for Wall Street firms. They're rushing into China to take advantage of the country's massive pools of savings, and they want to mediate those savings, create wealth management products. One day they hope that they'll be able to help some of that money invest overseas. But second of all, that there are a lot of $2 trillion worth of Chinese shares which are traded in the U.S. And so American funds, including pension funds, are pretty heavily exposed to what's happening over there. And what's happening right now is this crackdown on the tech sector, which appears to be broadening now to much of the private entrepreneurial class in China.
Is any sector safe from the crackdown?
Well, you hear people like Kathy Wood of saying, you know, you've got to invest in those sectors that the government favors. And so that might be so-called hard tech versus soft tech or consumer tech. It's really hard to say. I mean, you know, the crackdown has been so broad. It's covered so many sectors, from fintech to ed tech to real estate. It's really difficult to know what exactly the government's intention is, and if it really is a generalized attempt to essentially soak the rich to pay the poor. The government says it's not, but it does certainly seem to be that way. Pretty much any company now that, you know, has wealthy private billionaire owners is going to find itself in some way or another a target.
That's certainly a large number of companies and a relatively large number of people as well. Andy Brown, editorial director of Bloomberg New Economy Forum. Andy, thank you as always for taking the time. We really appreciate it. He joins us on the phone from New Hampshire. In just a few minutes, we are going to head to Washington, D.C. and speak with our congressional reporter for Bloomberg News all about the House Democrats' plan to tax corporates at 26.5%, so increasing it by not as much as people had thought. Let's stay in D.C. and go to Nancy Lyons for a check of the latest world of national news. Hey there, Nance.
Hey, Tim. Secretary of State Antony Blinken is defending the U.S. withdrawal from Afghanistan. Testifying in a House hearing, Blinken says it was time to end America's war, and he's also defending the way the withdrawal was handled.
The evacuation itself was an extraordinary effort under the most difficult conditions imaginable by our diplomats, by our military, by our intelligence professionals.
Blinken says the U.S. had reached out to Americans at least 19 times since March, and he says those outreach efforts are continuing for the remaining 100 or so Americans still in Afghanistan. A vote is expected in the House Ways and Means Committee this week on tax proposals to help pay for their spending agenda. Bloomberg's Washington correspondent Joe Matthew provides some of the details.
We've got a higher corporate tax rate, 26.5%, higher capital gains tax rate, 25%. Both are below what President Biden asked for. But the Ways and Means Committee also added some things that he didn't ask for, like a 3% surcharge on people making more than $5 million a year. That would generate some $127 billion.
Matthew says these tax proposals are the way Democrats are looking to pay for almost all of their spending agenda, totaling $3.5 trillion over a decade. Tropical storm Nicholas is strengthening just off the Texas coast and could blow ashore in Texas tonight as a hurricane, as it brings heavy rain and floods to coastal areas from Mexico to storm-battered Louisiana. Up to 20 inches of rain could drench the Gulf Coast, including the same area hit by Hurricane Harvey in 2017. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Tim Stenovec and Kriti Gupta live in the Bloomberg Interactive Brokers studio in New York. Something I know a lot of our listeners are familiar with are those SALT deduction caps, state and local taxes affecting many people in states like California, New Jersey, Connecticut, and of course here in New York. Well, now House Democrats said that they will propose a significant change in the $10,000 limit for the federal deduction for state and local taxes after the Ways and Means Committee didn't address the tax break in a package of proposals, Kriti, that were released on Monday.
You know, it's fascinating that we are still talking about this tax debate for so long. This was something that was such a key part of what was priced in when we were talking about Biden's election. And here we are now discussing it. The big question, though, is what is the market impact? Because at the end of the day, you do have that. This is essentially some kind of mini form of a wealth tax, apparently. And right now, it doesn't seem like the markets are even paying attention to it.
Yeah, look, I think it's still relatively early on in the process. And when we saw stocks higher earlier in the day, thinking bigger about what Democrats are proposing, I think that was a reaction to a 26.5% corporate tax rate, because there was concern that it would be even higher than that, perhaps go back to what it was pre-Trump. This would actually be something in sort of in the middle of where things are now and where they were before President Trump took office in 2017. The deduction, though, when it comes to the SALT cap, state and local taxes affecting property owners and affecting people who live in higher tax states, is a tricky issue for Democrats as they try to put together a structure to pay for Biden's plans, because it would cost revenue to raise the limit. A group of lawmakers from high tax states has warned that they won't support any legislation unless the SALT cap is addressed. Some party progressives, though, including New York Representative AOC, have called the SALT deduction a giveaway to the rich because most of the benefits flow to high-income households. So it's weird because there are Republicans and Democrats from these high-tax states that agree on this, but at the same time, you have Democrats from these states who say, hey, this is actually a good thing because it is targeted taxes mostly affecting the wealthier and property owners. This is Bloomberg Business Week, and this is Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Choppy session, S&P back in the green, barely. We've got the Dow higher, NASDAQ lower, lots going on. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading mixed today with the Dow currently up 192 points. S&Ps are higher by a point. NASDAQ is lower by 39. The U.S. 10-year yield at 1.32%. Gold is up 5. Transports are a little changed. And among the main 11 S&P sectors, only energy, financials, and real estate were in the green. Healthcare was under pressure. Leaders to the upside in the Dow, UNH and Intel, while Nike fell 2.9% and led to the downside. In deal news, CNBC reported that PE firm Ceres Capital is in talks to acquire Radar. And in other news, Capital One to test the buy now, pay later product later this year. Wrapping things up, Oracle reports after the bell. Live from the first breaking news desk, I'm Bill Maloney.
Okay, we thank you very much, Bill Maloney. Oracle down by 1% of the year. Live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, House Democrats are floating a 26.5% top corporate tax rate in a tax blueprint. The corporate tax rate and the capital gains, it would be short of the Biden plan. The House Ways and Means Committee set to debate the proposal starting tomorrow. Joining us is Billy House, congressional reporter for Bloomberg News. He joins us on the phone from Capitol Hill. You can follow him on Twitter at House in Session. Billy, great to have you on the show. 26.5%. It's less than it was before the Trump Tax Cuts and Jobs Act of 2017, and not as high as Biden would like to see.
That's correct. This is a big chunk of what Biden wants to pay for his $3.5 trillion social program, part of his economic agenda. But it's less than the 28% rate that he wanted to do. So it's a rollback, and it's kind of a nod to moderates in the party who didn't want to go as far as Biden did.
Billy, let's talk about the likelihood of this coming to fruition here. How likely is it that we see a 26.5%, or could we actually get that 28% that Biden wanted?
The latter, what Biden wanted, is very unlikely. It's also very conceivable that 26.5% could be hard for Democrats to get. This is, of course, proposed in the Democratic Ways and Means legislation. This is all to be put together and given to the Budget Committee by Wednesday, but we got a long haul for it to go through the Senate and the entire House. And, of course, Pelosi, the Speaker, and Democrats are working with very small margins, and there are just people in the Democratic Party who don't want this much of an increase.
Who are those people?
26.5. Well, there's the usual suspects, the moderates like Josh Gottheimer, maybe perhaps from New Jersey, but there's the New Dems, a business-oriented group of lawmakers who New Dem coalition who have been silent so far, but wait for them to speak out soon.
Billy, what's the hesitation here? What are some of these congressmen really worried about when it comes to this rate?
Well, some of them come from swing districts or districts that have a lot of corporations or businesses that would be hit directly by this. And, of course, we have a mid-term election next year with the traditional winds being against the party in the White House. So all of that is coming into play, and some of the pressures all beating down. This will be really chopped back.
Okay, so corporate tax rate is one thing. Another element of this would be the tax rate on capital gains, specifically the top rate on capital gains, rising from 20 to 25%. That is a far cry from what President Biden proposed, 39.6%. So if you include the 3.8% Medicare surtax on high earners, the top capital gains rate would be 28.8%. Again, that's like 11%. Lower than 11 percentage points lower than what Biden wants to see.
That's correct, and it's not clear what will come of that initial Biden plan in the end, but that is a market change. But again, designed to help get it through not just Congress, but through his own party.
Billy, in your story, you say Republicans and even some Democrats have expressed concern about the proposal's ability to hurt family farmers businesses despite Biden's promises to include protections for them. Talk to us about the protections that you're referring to.
Well, just more generally, for instance, there's scant information about the estate or the so-called death tax, but that is a big worry on rural lawmakers' minds and other lawmakers as well. And of course, Senator Joe Manchin has offered a lot of comment that perhaps other moderates themselves won't say out loud too in this regard. So all this is very preliminary. We're talking about draft legislation, but they're going to be hashed out. This is all supposed to be done by Wednesday and given to the Budget Committee, but that seems like a real tough hill to climb.
So what happens after Wednesday if they are able to get it complete by Wednesday, or at least get the they want by Wednesday? Is that when would be a realistic timeline for actual changes to go into effect? If and a big if here, they can get Democrats and Republicans to agree on it.
Okay. Well, that of course is a big if. But of course, they're supposed to give this to the House Budget Committee Wednesday, which will then draft legislation for a bill to go before the Senate and the House. The Senate has its own tough rules, hoping to pass this measure with Democrats only. And much of this, even Pelosi says, will not make it through that process. So what we're looking at perhaps is a vastly scaled-back final version, and this could be hashed out through September and certainly deep into October before any of this sees the light of day.
It was interesting, Billy. You know, we had Abigail Doolittle on earlier, markets reporter here, and she was saying how, you know, people joke with her about markets reporters looking to ascribe reason as to why markets go up and go down. And earlier in the day, we saw when futures were green, some reporters saying, hey, this is a sign that, you know, investors are excited about 26.5% corporate tax rate. Does anything ring true about that to you, just in the last minute we have with you?
It's funny you say that because we talked about that too. I mean, it's like good news, bad news. It's going up, but not going up quite as high as we thought it might under Biden. It's really hard to ascertain, and even now, that figure is kind of amorphous. They're only just now in the throes of hashing it out. So, but the markets look for things to react to, and they obviously reacted to that.
Yeah, and we certainly look for things that the markets are reacting to. Billy House, congressional reporter at Bloomberg News. Billy, it's always great to chat with you. Thank you so much for stepping away from Capitol Hill for just a minute to join us. You can find Billy House on Twitter at House in Session. Give him a follow to get the latest from Capitol Hill. In just a few minutes, we are talking, of course, the song of the day, the chart of the day, and, of course, the stock of the day. Dave Wilson is going to be joining us. This is Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenovec and Kriti Gupta live in the Bloomberg Interactive Brokers Studio. Dave Wilson, stocks editor at Bloomberg News, just walking in right now, getting his song of the day, chart of the day, and, of course, stock of the day ready. Kriti, are we going to pull it off? Did you spend the weekend studying?
All of Dave's tunes,
Okay,
all of his playlist, his Spotify.
You know that every month he publishes one on Spotify, so you can study, okay? But it's backward looking.
Now we know what I'm doing next weekend.
Like so many charts, backward looking. Let's get a check on the latest when it comes to the business day. Charlie Pellet is standing by. Hey there, Charlie.
Well, hello there, and here's what's going on. We've got 28 minutes to go ahead of the closing bell. The Dow, the S&P higher, NASDAQ on the minus side. Mixed Monday here. Energy companies mostly positive as crude extends a rally to a 6-week high. Bond yields decline. The dollar little changed versus its major peers. S&P up 5 now, a gain of 0.1%. The Dow up 229, up 0.7%. NASDAQ up 18, a gain of, a loss, I should say. We've got NASDAQ down 19 to be clear, lower by 0.1%. The NASDAQ 100 index also lower now by 0.1%. Spot gold up 0.3%, $17.93 the ounce, while crude is higher by 1.1%. West Texas Intermediate, $70.51 a barrel. An all-star panel of scientists from around the world says COVID-19 vaccines work so well that most people don't yet need a booster. The review published in the medical journal The Lancet comes as most countries with ample vaccine supplies debate whether to allocate doses for booster shots to prop up immunity and potentially help stop the spread of the more infectious Delta variant. School students in New York back to school today amid questions about vaccinations for kids under the age of 12. Dr. Joshua Sharfstein is Vice Dean at the Johns Hopkins Bloomberg School of Public Health. He was interviewed this morning on Bloomberg Radio and Television.
I think that we're headed right now into a bit of a new normal. You know, we can go to work, but we may need to wear a mask in the workplace or make sure everybody's vaccinated. And the people need to be a little bit more vigilant. I think we're going to be in that period for a while, at least until cases really go down. And we, get a little bit more of a distance between us and the virus. It obviously depends on where you are in the country and the situation.
Dr. Sharfstein with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine stocks that we follow, Pfizer is down 2.5%. Its German partner BioNTech down 6.4%. AstraZeneca down 0.5% now. Moderna is lower by 6.7%. Johnson & Johnson down by 0.9%. Recapping, stocks are trading mixed, but the S&P is up 6 now, up by 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Bloomberg. Carol would get this one.
Yeah, I think Carol would.
Carol would get this one. She'll be back on Thursday.
Yeah. I am lost.
Yeah, so am I.
Okay.
I can't even,
it's a nice, melody,
Dave.
though.
Well, it is. It was actually originally done by an R&B group called the Persuaders. And that is the rock version that you heard from... Does the name Chrissie Hynde mean anything to you?
Kriti?
It does not. I'm ashamed to say.
Lead singer of the Pretenders.
Ah, okay.
It's their version of Thin Line Between Love and Hate.
So not as the Pretenders, out on her own.
No, it's a Pretenders song.
Oh, it is? Okay.
Yeah.
I'm learning so much.
Well, there is a
This quite
connection
the
to
education.
today's chart, which is titled Love and Hate.
Yeah, exactly. There's definitely that relationship. And what the chart does is look at options trading, because you can break it down when it comes to the equity markets into individual stocks and indexes. And CBOE Global Markets does what are called put-call ratios on both. So, call ratio or a call option, you're expecting the stock to go up. The put rate, put contract, you expect it to go down, and so you're comparing the two. So, a high number, would suggest that people are really pessimistic, and a low number, the opposite. And Liz Ann Saunders over at Charles Schwab, who's their chief investment strategist, basically compared the two ratios in a chart on Friday, and my chart basically reproduces that. What you find out is, think about what's been going on with the meme stocks and whatnot. It isn't just that people are buying shares. They're also buying call options. So, there's some optimism around about individual stocks. But in terms of indexes, a lot of times, if you're an institutional investor, you may want to hedge your holdings of shares, but you can't sell them, don't want to sell them. No, you can buy put options instead. That's one strategy that you can follow. So what's happened is you've got this yawning gap between the put-call ratios for individual stocks and the comparable ratio for indexes. In fact, it's the biggest gap since August 2007. And, a little market
We know what
history.
happened then.
Yeah, we do. That the market peaked in October, and then things kind of fell apart. In any case, it is a bit of perspective, if nothing else, on what we're seeing now. And actually, what's interesting, if you go back, and the chart does go back, you see that during that bull market, you had readings comparable to what you have now.
Well, that's what's so interesting about this, Dave, is that it was elevated for pretty much the entirety of after 2007, after the market peaked, and it took until now to get back down to that level.
Yeah, it just shows you, after more than a decade, for the most part, of a bull market in stocks, people are more inclined to make those kinds of bets. Of course, now, you've got Robinhood and other marketplaces where you can basically trade options and not pay commissions. So, you'd think that would encourage some people to move in. And, they're not looking for shares to go down as a rule. They're looking for them to go up, and that means call options.
Dave, what's it going to take to turn this around, to lessen the bullishness?
That is the big question. If you can answer that one, you know where the market's headed. All I can say is that if you want this chart, folks, send me an email. I'll get it to you with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Okay, Dave, give us your stock of the day.
That would be Porch Group. This is a company that went public in December by merging with one of these blank check companies. They specialize in software used by home inspectors, moving companies, anybody sort of in that area, and also insurers. And, they've actually been buying a few companies since they went public. And so now, Porch Group, by the way, the ticker PRCH, Porch without the O, is planning to sell $350 million of convertible debt privately. Looks like the first fundraising since the company went public. And suffice it to say, it didn't go over so well. At the moment, Porch Group down more than 16%, headed for its biggest loss since going public.
Still higher, though, by 30% so far this year.
Okay.
We'll all right. Dave Wilson. Look for Dave's Stock of the Day just after 4:15 p.m. Wall Street time. It's on Facebook, LinkedIn, and on Twitter @TheOneDave. Stocks editor Dave Wilson, thanks so much. Let's head to Washington, D.C. for a check of world and national news. Hey there, Nancy Lyons.
Hey, Tim. President Biden is on a swing through western states, surveying damage wrought by recent wildfires and also talking with fire agency officials. Biden, the first sitting president to visit the Interagency Fire Center in Boise, Idaho, says federal firefighters who've been battling thousands of blazes for the last few months deserve an increase in their paychecks.
I've directed my administration to provide for pay bonuses and incentives to ensure every federal firefighter, because that's the only authority I have, makes at least $15 an hour. They should make a heck of a lot more.
Biden will also be attending a rally later tonight in Sacramento for California Governor Gavin Newsom, who faces a recall vote tomorrow. North Korea says it has successfully launched a new type of long-range cruise missile. State-run media says the missiles fired for more than 2 hours and covered about 1,500 kilometers over land and sea. Bloomberg's John Hershkovitz has more from Tokyo.
This type of weapon, if it is what North Korea says it is, it just presents new challenges to South Korea, Japan, and the U.S. as they try to defend the airspace against something that North Korea could launch in the region.
The state-run media report is calling the new missile a strategic weapon of great significance. The Pentagon says all flights of Afghan evacuees into the U.S. have been halted for another 7 days. That's at the request of the CDC due to several more measles cases. Pentagon officials say 3 cases were diagnosed among Afghans arriving at Dulles International Airport in Virginia, 1 at Fort McCoy in Wisconsin, 1 at Fort Pickett in Virginia. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
Thank you so much for that update, Nancy Lyons. Tim Stenovic and Kriti Gupta live in the Bloomberg Interactive Brokers Studio in New York. A couple stories that we want to get to. The Justice Department is overhauling a program to curb abusive policing. It's making a series of changes aimed at improving its ability to monitor the progress that state and local law enforcement agencies are making when it comes to ending abusive police practices. That's according to Attorney General Merrick Garland. Kriti.
Yeah, the new policy comes after they revived the pattern or practice investigations into police departments. That tool largely abandoned during the Trump administration. So the seas are changing. The tide is changing, I think is the phrase that we're meant to use here. But pretty interesting to see that this is actually making progress. This isn't something that's becoming kind of tied down to politics necessarily.
Yeah, a tool that, as you mentioned, it was largely abandoned during Trump administration, opposed by some cities and state officials who see the probes, which often lead to court-ordered consent decrees, as federal overreach. Consent decrees are the agreements that are negotiated between the Justice Department and law enforcement agencies to improve their policing practices. The new changes have been described in a 9-page memo that was released today, and they include requiring a hearing no more than 5 years after a consent decree goes into effect, so a jurisdiction can make its case for terminating the pact, as well as constraining the cost to monitor compliance and progress. Another story we wanted to talk about that has to do with policing, sort of mixes policing with the rise of streaming services. The show's 33rd season of Cops is actually going to premiere on Fox Nation next month. Fox News streaming service has revived Cops after it was canceled. It was a long-running reality show that was canceled last year, this amid heightened scrutiny of police interactions in Black communities. Kriti, the show's 33rd season is going to premiere on Fox News' streaming service. It's called Fox Nation, Fox Corp's cable news channel, set on Monday. The programming also includes 15 episodes from the prior season.
Yeah, I mean, and a really interesting idea here that they're finding a pretty loyal audience with the folks who work in law enforcement. So really great for them.
Yeah, Fox Nation is $6 a month, and there are a host of streaming services that compete with it, but it's separate from Fox News. This is Bloomberg, and this is Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell. The Dow, the S&P both higher. NASDAQ on the minus side. Little change in the S&P right now, up by 1 point, up less than 1/10%. Energy companies, though, positive as crude oil extends a rally to a 6-week high. West Texas Intermediate crude up 1.2%, $70.56 a barrel, up right now by 84 cents. Gold higher by 0.3%, $17.92 the ounce. An ounce of the precious metal up $5 the ounce right now. 10-year up 5/30 seconds. 10-year yield 1.32%. NASDAQ down 40, a drop of 0.3%. The S&P's up 1 point, little change. The Dow up 205 now, up by 0.6%. Again, recapping here, S&P 500 index higher by 1 point, up less than 0.1%. We'll be getting Oracle earnings after the close of trading. Oracle down now by 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is the Drive to the Close, and we're just over 10 minutes away from the market close on this Monday, September 13th. Another choppy session. Market really looking for direction. We do see the S&P 500 higher, but just barely right now, not even a point. The Dow higher by close to 0.6%. The NASDAQ, though, in the red, down close to 0.3%. Let's get all into it with Ross Gerber, President and CEO at Gerber Kawasaki Wealth and Investment Management. He joins us on the phone from beautiful Santa Monica, California. Ross, how are things by the beach?
It actually is beautiful.
Oh, interesting. Like it always is there.
Quite good.
I can say that as a Californian. I know that it's always nice. Hey, I want to talk a little bit about what you think has been happening in the markets, because if we do see the S&P 500 close lower today, and it could, it's fluctuating between positive and negative territory. It'll be a 6th day in a row of declines, something that we haven't seen for months. What do you make of it?
I think it's great. I mean, you can't have a stock market that only goes up every day. That concerns me a lot more, So a healthy pullback in stocks, it's good.
What's a healthy pullback to you, though? Because this isn't even 2% yet.
Yeah, I know. It's not really a healthy pullback. I was going to say a 2% pullback is not even really a pullback. It's mostly a statistical anomaly, right? But let's say the market goes down 5 or 10%. I think we get down to a value that makes sense. So we think the S&P is worth about 4,000. It's trading a good 10% higher than it should, but that's mostly because of the tremendous liquidity that we have in markets in our economy right now, and enormous levels of spending and economic activity that we're seeing across the board. So the markets can warrant a higher valuation at this time because we have an abnormal government policy at this time. So having a little bit more volatility, I think, is an advantage for investors who know what they're doing.
I want to ask you, Ross, how does someone know when to actually buy this dip? Because that was something that we saw year to date. We saw plenty of pullbacks, less than 3%, not huge pullbacks, but pullbacks nonetheless. And people immediately bought the dip. So is this one of those times when you have kind of the seasonality of September kind of in your back pocket?
Yeah, absolutely. And so, I do a lot, I'm kind of old now, so I do a lot of research about my 28 years that I've been doing this as a professional, and many years before that as a kid. But when you think about what really hurts markets, so you have corrections, or okay, that's normal. You get one a year, a 10% correction. But then you have bear markets, and you have very, very difficult markets. And most of the time that's predicated by the Fed. So almost every real market decline we've had is because of the Federal Reserve or a banking crisis. So I don't see a banking crisis on the horizon in any way. So it's really the Federal Reserve. So the only thing that's going to make stocks go down is when you take liquidity away. And so that process is going to begin with the tapering soon,
But that's not even really taking liquidity away. You know what I mean? That's just like taking a ridiculous bond buying away. And so rates themselves don't even look like they're going to go up for another year. So for investors, you want to buy the dips and keep playing the game until the Fed takes the punch bowl away.
What does it look like? What does the Fed look like when it takes the punch bowl away? What does that look like to you if it's not tapering? Is it just raising rates?
Yeah, it's raising rates, and it's usually like, what do they say? It's after the third increase is when it all goes downhill. And you really can look at this historically. You can go back to the 90s. What killed the bull market in the 90s was Alan Greenspan. He killed it, and then we had September 11th, so it extended the bear market into one of the worst three-year bear markets, probably one of the worst bear markets we had, and then followed by the financial crisis, which was really a self-created event from greed and stuff, also created because of low rates and a lack of, oversight and such. And so when you go back to, 90, 91, it was raising rates again and a bank crisis. So, like when you think about COVID, the market was down 20, 30%, and next thing you know, they're buying everything in sight to protect the market. I would argue that investors have a level of safety they've never had before in the history of markets when the Federal Reserve is also out as one of their mandates to protect the stock market. So they don't say it, but that's what they're doing. So how bad of a bear market are we really going to get before the Fed comes in and starts buying stocks or whatever,
Ross, it sounds like you're completely discounting, and maybe for good reason, whether or not we even have a taper tantrum at all. What do you think?
Yeah, I mean, like, once again, I've been doing this so long, and, their valuations are elevated, so a 10% correction is warranted, and I don't know when or if that's going to happen, but I don't play the game of waiting for the correction, and then when there is one, I buy it. You know what I mean? But, like, you just have to look at liquidity. So when the U.S. government is talking about spending $3.5 trillion like it's nothing, and then, like, one senator is unhappy, Joe Manchin, who probably is the only Democrat that isn't completely high on drugs. And he's like, maybe this bill is, like, really high. Like, this level of spending makes no sense. No sense. So we're going to raise taxes, hurt the economy, and spend tons of money and just create more liquidity. It's just not policies that make any logical sense for anybody. And so there's so much liquidity because they just keep printing money, and then hence why cryptocurrencies are doing so well and why so many investors are moving money out of the traditional financial system into the crypto system.
Ross, let's transition from the macro picture to the micro picture, because I have a really interesting piece in my notes here saying that you not only own shares of Tesla, but you have a Model 3. I'm curious, and I've been dying to ask this question to someone who looks at individual stocks. How do you price a stock like Tesla, or for that matter, any electric vehicle maker?
Well, full disclosure, I got the Model S Plaid recently in June and sold the Model 3 for about $5,000. Yeah, I sold it for $5,000 less than I bought it for after driving it for 3 years. So it was the best return I've ever had on a car. I was like built equity in my car. Like, that's how cool this EV business is, or electric vehicle business that Tesla's built. But I think so many investors are caught up with what I call 20th century mentality towards valuations. Okay, we're in the 21st century now. 15 PEs aren't a reality. This country is the most competitive country in the world. You literally cannot invest in any other country in the world with the same level of confidence that you do in U.S. equities. Not only that the companies are good, but also run with accounting standards and ethics and corporate standards that are higher than anywhere else in the world. So when you think about, if I'm a global investor, where do I put my money? Well, it's got to be the U.S. And then you think about companies that are innovating and creating amazing products and services that are going to change the world, and there's only a handful of those. And then you think about what are the two biggest industries that are being disrupted right now, and you have transportation and you have energy, and Tesla is the one doing it. So to look at a traditional PE ratio would be a mistake when you're trying to value Tesla, when you're talking about a company that is really cornered the market in battery production and technology, as well as EV production and technology, AI, robotics. I mean, it's endless Tesla is trading, I think, for what it's worth right now.
$745 a share, $744 a share.
Yeah, I think it's worth about $750, and I think its upside is to about $1,000 when they complete their 2 factories and get those up and running, which could be by the end of the year. So, when they get to 2 more factories, they'll be able to double production. And so if they have the production capability to double production in a time where most car companies are cutting production because they simply can't make cars, it's a huge opportunity, not to mention the enormous demand for vehicles irrelevant of Tesla.
Russ Gerber,
it's a great opportunity.
Unfortunately, have to leave it there. We always love chatting with you. Thank you so much for taking the time. Ross is president and CEO of Gerber Kawasaki Wealth and Investment Management. He joins us on the phone from Santa Monica, California. Well, coming up next, it is a Bloomberg Beyond the Bell. It is our cross-platform coverage of the market close. We're going to be joined by our colleagues from Bloomberg TV. It's available on YouTube, Bloomberg Radio, and Bloomberg Television. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs gone, Shonali Bassick in. Taylor hopefully will be back, but we're going to count you down to the closing bell today without her. Here to help take us beyond the bell. We're joined right now by Tim Stenovic and Carol Massar, who is out. Kriti Gupta in for Carol Massar. For those listening on radio, watching on TV, or streaming us on YouTube, don't worry, we're all here to parse the crucial moments of the trading day. And Tim, it's been a kind of a topsy-turvy day. We looked like we were heading for a 6th straight decline here on the S&P 500, but right now we're up about 0.2%.
Yeah, topsy-turvy is a good way to describe it. I mean, really fluctuating between positive and negative territory throughout the day, guys. Kriti, I gotta say, the S&P 500 looking like it is not going to close lower finally after 5 days of closing lower, but a choppy session, and it's not like we're seeing those dip buyers come in.
And we were waiting for those dip buyers, Tim. It's so important to think about the fact that every pullback that we've had year to date, even 2-3%, they've been met with dip buyers. So how much of that September seasonality is really in play here, Caroline?
Yeah, seasonality means that people are finally going back to school and they're going back to work, and we're seeing volumes take that much higher, even though we don't see huge moves in the benchmarks in and of themselves. We're certainly getting money put to work in one direction or the other, shouldn't I?
Yeah, absolutely. And there's a lot of great points made about leverage and whether people are willing to take on risk in this market. To all of your points about dip buying, if there's so many warnings coming up about a better decline, then why not wait?
Yeah, and I mean, we talk about Lori Calvasina's call, and we talk about some of the other strategist calls here, the bullish calls, if you will, but they're sort of bullish with sort of a little bit of a trepidation here, a little bit of a caution here about where we stand right now. And where we stand right now, as we get the closing bells, you're talking about a Dow Jones Industrial Average, the outperformer on the day, up 261 points, about 0.8% here as we wait for these numbers to settle in. The S&P 500 looks like it is going to snap that 5-day losing streak to end higher here, up by about 10 points or 0.2%. The NASDAQ composite, though, sitting this one out, only down less than 0.1% on the day, down about 10 points here, but not really participating in much of the rally today. And the Russell 2000 got in on the action today. It's going to finish the day higher by about 0.6%, right around 24.41. Of course, a lot of that has to do with some pretty strong bids that we saw today, Tim, with regards to the energy companies.
Yeah, you mentioned Lori Calvasina's comments that we got earlier in the day. We just spoke to Ross Gerber at Gerber Kawasaki Wealth Management. He says a pullback like this, or even one that's bigger, is a good thing. He thinks that the S&P 500 right now is really about 10% too high in terms of prices, and he expects it to come down significantly, and that would be an opportunity to buy, Caroline.
Oh, if we could all have 10%. A cent or a dollar for every time we hear someone say a healthy correction, then we'd all start to be adding up a little bit. Meanwhile, in terms of a healthy correction, maybe it's an unhealthy set of numbers that you're seeing for the likes of Moderna. Today, we of course had all those headlines regarding whether or not you need a booster shot or not. That was impacting some of those pharmaceutical companies, and therefore in the sector level, for our radio audience, I'm looking at the pharmaceuticals, one of the underperformers, off by 1.3%. Consumer durables were the key underperformer, off by 1.3%, but food and staples also falling. Retailing index on the downside. We haven't talked about that. Well, massive bit of fake news that came in at the start of trading this morning regarding Walmart and whether or won't be getting into cryptocurrencies. It negated that story, I might add. We'll dig into the Litecoin fandango a little bit later. Meanwhile, energy, though, is your key outperformer in terms of industries, up 2.8%. That's as oil rides higher. We see the Bloomberg Commodity Index go higher. Banks also on the upside, even though yields were dipping a little bit today. And autos, Romaine, you were telling us how GM was getting a bit of a bid, and the likes, those unionized EV makers seem to be getting a little bit of positive news today.
Yeah.
Well, Caroline, I want to hit those gainers because you mentioned energy in particular. This is going to be really crucial because one of the top ones is Marathon Oil. This is, of course, coming in anticipation of yet another hurricane, a tropical storm, Nicholas, on its way to Texas right now, really kind of very close to the path of Hurricane Ida. Of course, you are seeing some of those refineries under pressure, and therefore the crude market and, of course, those energy stocks really anticipating that move. That's one of those gainers. I also want to bring up AT&T because last week we heard about a deal, Dow Jones reporting that Fox is nearing a potential deal to buy TMZ from AT&T, and looks like this is a stock that is still getting some heavy trading volume, of course, a couple of days later. Interesting to keep in mind, you're also seeing semiconductor stocks up on a day when you have a lot of big tech really under pressure. The NASDAQ Golden Dragon Index, for example, down 1.1% at the close, and yet semiconductor stocks up, Tim.
Well, you got the gainers, I got the decliners. Let's start with Nike. Shares finishing the day lower by 2.5%. BTIG downgraded it to neutral from buy over supply chain concerns, essentially saying, hey, demand is there, but the supply is the issue. We see those ongoing factory closures in Vietnam, and that could hurt the chances of people actually being able to get their hands on the Nike gear that they want. Caroline, you mentioned Moderna shares falling by 6.6% today. A group of scientists in The Lancet argued that vaccines work so well that most people don't yet need a booster. That would mean we are buying less from Moderna and from Pfizer. An advisory committee set to discuss this week Pfizer and BioNTech's application, though, for their booster. Also keep an eye on SPCE, Virgin Galactic, finishing the day down by close to 3.6%. The company delayed its first commercial space mission, this one with the Italian Air Force. This is different than the issue that the FAA has raised, the FAA investigation related to that July flight. Still true is saying that it's not impactful to the long-term thesis on the stock, but still finishing the day down close to 3.6%.
Have we got SpaceX this week?
Sorry?
Haven't we got SpaceX doing?
We do, yeah. It's set to launch from Vandenberg Air Force Base.
Tim, our resident
California.
space expert. Meanwhile, let's look at what's on the higher side when you're looking cross assets at the moment. I'm looking at the currency vertical when you're looking at global macro movers. What's on the higher side? Commodity-related currencies. We're seeing the Canadian dollar up 0.3% against the US dollar. We're seeing the Norwegian krone doing well as well, up by 0.3%. Why? Because this is a story of commodities really ramping higher. You just saw the headline coming across the Bloomberg terminal of the Bloomberg Commodity Index at a fresh 10-year high. You've got aluminium, I'm going to say it that way, up at a 13-year high. Natural gas at a 7.5-year high. Nat gas up almost 5% is where we saw it, 5.182. WTI crude also getting a bid, up 1.3%. We're at $70.65 on WTI crude. Why? This is all about the ongoing worries of storms, about the implication that has for production, and of course some of the supply side wranglings when you're looking at aluminium. So clearly a money to be made in commodities. A mixed picture when you're looking at sovereign bonds. I'm seeing money move into the Japanese 2-year, for example, 2.5 basis points lower, and money moving into the US debt as well, Romain. You have more on that.
Yeah, absolutely. I mean, look, it was kind of a mixed day for treasuries. You did see some bids come in here that pushed yields down here on the day here. Of course, a lot of this is really the setup for what's going to happen in about 16 and a half hours time when we get that US CPI data here. It'll be interesting to see how, not only how the long end of the curve reacts, but that belly of the curves that we used to talk about a lot, and whether or not that sort of one print here and you add it up with the previous 2 prints that we have, which of course were a little bit of a shocker, whether that's enough to sort of drive the perception here that maybe this is a little bit more than transitory, Tim.
Yeah, I'm keeping an eye on Oracle because shares just crossing the Bloomberg right now. First quarter adjusted revenue coming in below expectations, $9.73 billion versus estimates of $9.77 billion.
Yeah.
Shares lower by about 2.7% right now. Adjusted EPS coming in at $1.03, beating estimates though remain of 97 cents.
Yeah, just sorry, while you were speaking, Tim,
yeah.
I was looking crossing the wire into it. Doing a big deal here. This is for a MailChimp. Of course, anyone who's listened to a podcast can't get away from those darn ads. But apparently those ads are worth $12 billion.
$12 billion. That's higher than the $10 billion that was earlier reported.
Yeah, this was a big deal here for Intuit. Of course, and really, I mean, obviously a big deal for our MailChimp with the $12 billion valuation. But what I think is interesting about this, guys, is really the idea that Intuit gives an opportunity here to kind of diversify its business a little bit. And this could have some huge implications for the company should this be pulled off. And we should point out this is, they did put out a statement. So that's coming in $12 billion.
I mean, it's interesting that amid this narrative, we've all been wondering what the direction of big tech and small tech is going to be in this inflationary outlook. If we do get a CPI print that runs hot tomorrow, if we do then foresee interest rates to be on the rise, what does that mean for your growth story, your key growth names for these slightly smaller tech names such as Intuit, does that still remain the buy?
Yeah, and what's interesting also is you see these companies really switching it up on investors and investing in the future via M&A, via technology. And regardless of interest rates, you do generally see investors rewarding executives who are willing to shake things up a bit.
Chanel, it's interesting. I mean, we're talking about yields here. We're talking about inflation. We also got the New York Fed's metrics coming out this morning. The 30-year median inflation expectations hitting 4%, up from just 2.54% at the end of 2019. Now, that is an all-time high, but I do want to point out that that data series only goes back to 2013, but still some pretty strong numbers. If that's an indication of what we're getting in the CPI print tomorrow, we should see yields higher, but really it's anyone's guess.
Yeah, it's not just what we see with inflation, but also what consumers expect when it comes to inflation, because if they expect to be paying more, they adjust their spending habits, and also to what extent they actually ask their employers for more money, and to what extent employers have to pay.
But isn't this sort of part of the debate, though, Tim, is that there are a lot of folks out there who will say that that's already been felt by at least by a certain income class here in this country, that inflation is real. It's been here for a while now, and for them, it has been sticky, and it has altered their spending habits in a way that I think has started to show up in other economic data points other than the inflation reports, and with regards to some of those personal spending and household spending numbers.
Yeah, I think that's true, and I think it remains to be seen to what extent that group of consumers pulls back, and if some of those consumers do end up jumping back into the workforce or changing jobs. Remember, there is this imbalance between the number of jobs available and the number of jobs that people are actually going for right now. Guys, that is going to do it for our cross-platform coverage this afternoon on YouTube, on Bloomberg TV, and on Bloomberg Radio. We will see you tomorrow, same time, same place.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Kriti Gupta live in the Bloomberg Interactive Brokers studio. We are keeping an eye on what is happening with Oracle right now. Shares are lower in after-hours trading by 2.8%. The company reporting adjusted revenue of $9.37 billion versus $9.7 billion of expectations. We're also seeing that Oracle's adjusted operating margin coming in at 45%, beating estimates of 42.5%. The company is saying adjusted EPS coming in at $1.03 versus estimates of 97 cents. The company also saying it's maintaining its quarterly dividend at 32 cents a share. Adjusted cloud services license support revenue coming in at $7.37 billion. Shares of Oracle in after-hours trading continuing to jump around just ever so slightly right now. It is down by 2.38%. Nance, we're going to have much more on Oracle earnings in just a few minutes. In the meantime, let's head to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey there, Nance.
Hey, Tim, plenty of finger-pointing today as Secretary of State Antony Blinken takes questions about Afghanistan from the House Foreign Affairs Committee. Democrats are faulting President Trump for making the deal with the Taliban. Republicans are calling the withdrawal a disgrace.
Democrat Brad Sherman asked the Secretary,
did the Trump administration leave on your desk a pile of notebooks as to exactly how to carry out that plan?
We inherited a deadline. We did not inherit a plan.
Republican Chris Smith said China was handed a cudgel against Taiwan.
Give up and surrender because the United States will, just as it did in Afghanistan, abandon them too.
There is nothing that China would have liked more than for us to remain bogged down for another 5, 10, or 20 years.
Blinken said also that if U.S. forces remained beyond August, they would have again been under fire from the Taliban, requiring reinforcement. In Washington, Irv Chapman, Bloomberg Radio.
Florida Governor Ron DeSantis is threatening local governments with $5,000 fines per violation for requiring employees be vaccinated. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenovic and Kriti Gupta live in the Bloomberg Interactive Brokers studio in New York. We're going to talk a lot about crypto in just a few minutes. I want to point to this article about Coinbase. I woke up to this news this morning, Kriti. The company selling junk bonds as debt investors are embracing crypto. It's seeking to raise $1.5 billion in its first junk bond offering. This is a deal that provides another stamp of approval for cryptocurrency, also a sign that the 9-year-old firm is gaining mainstream acceptance even as regulators ramp up their scrutiny. I couldn't help but notice this coming just about a week after we heard the company's CEO mention his disdain for SEC regulatory enforcement.
Yeah.
And also, he got a lot of pushback about what exactly is and is not the definition of a security.
Yeah, absolutely. You know what's interesting here is that Coinbase is coming out into kind of make their debut in the debt market. But remember, MicroStrategy did this too. They actually used crypto as kind of part of their leverage package, which is really interesting. You're starting to see a lot of these companies that are already crypto exposed. Their bonds actually going to essentially trade in line with the way Bitcoin does. That's something much more easily done in the stock market with, say, Riot Blockchain with Marathon, for example, because simply the volatility makes it easier. But the bond market is a completely different story. So it'll be really interesting to see how you price a bond when you're taking into account some of that Bitcoin volatility.
Well, speaking of pricing, in early pricing discussions, investors are evaluating yields in the low 4% range for the 10-year portion. That's according to people with knowledge of the matter. That's above the 2.89% average for companies with a similar credit rating that typically frequent the bond market to raise cash. Coinbase had received at least $2.4 billion of demand from investors for the notes by early afternoon. That's according to Bloomberg. A successful bond sale, though, would be a major step forward, Creedy, for Coinbase. It also underscores how crypto is becoming more widely accepted. I think about it from the perspective of, hey, this is like a company that's trying to disrupt the financial system, but also embracing the financial system.
Yeah, absolutely. Especially when you see them really go after those capital markets, really crucial there.
Yeah, this is Bloomberg Business Week, and this is Bloomberg Radio. Much more on crypto in just a few minutes. I'm Tim Stanovic, Creedy Gupta. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're keeping an eye on Oracle shares after hours, down now by almost 2%. Oracle reported first quarter adjusted revenue of $9.73 billion. The estimate on Oracle, $9.77 billion. Oracle's first quarter adjusted operating margin came in at 45%. Estimates were for 42.5%. Turned out to be an up day for the S&P 500 index, a mixed session of volatile Monday, but stocks did snap a 5-day slide. Energy companies led the gains as crude oil extended a rally to a 6-week high. S&P up 10, a gain of 0.2%. The Dow up 261, up 0.8%, but NASDAQ fell 9 points, down 0.1%. 10-year yield 1.32%. Spot gold up 0.3%, $17.93 the ounce. And West Texas Intermediate crude oil today up 1.3%, $70.65 a barrel. Again, gold up 0.3, $17.93 the ounce. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, shares of Oracle in after-hour trading down about 2% as we speak. We heard the numbers from Charlie, but the company just reporting earnings for the most recent quarter, so worth going over them again. First quarter adjusted revenue, $9.73 billion, beating estimates of $9.77 billion. The company is saying that adjusted revenue meeting estimates. We're also seeing first quarter operating margin coming in at 45%, above estimates of 42.5%. Let's dive into the numbers. Anurag Rana is Senior Software and IT Services Analyst at Bloomberg Intelligence. Joins us on the phone from Chicago. Anurag, thanks for joining us on this. I know you're still going through the numbers, but give us your first impressions.
I think it was a bit weak compared to what we had expected. We thought they would do a little bit better. The software season has been very strong when we look at companies like, Salesforce, Workday, Amazon. Like if you go back last 1 month, 1.5 months, we have seen really strong results from software companies. So in that light, I think it was a bit short of expectations.
I want to ask you about, I'm getting very nerdy here because I looked at your Bloomberg Intelligence kind of quick reactions. What's really struck me here was their operating margin. It looks like it's coming in fairly low. What are your thoughts on that specific piece?
See, a lot of it is their license revenues were down -9% in constant currency. That's a very high margin product. And so when you have a lot of that product being sold, sometimes you do see, the impact on margins. But, having said that, Oracle does have a very good margin structure compared to other companies. The issue with Oracle is not so much on the margin. It's a question of top line growth. The software industry grows somewhere around 2-10%. And in that market, when you look at Oracle, which is growing 2-4%, that's really not that good.
I'm wondering, Anurag, specifically about the transition that the company is making, needing to move more of its database clients to the cloud. This comes, as you've written, amid sharper competition from Amazon and Microsoft. How's the company doing at that?
See, on the applications, they are doing very well, and that's what, kind of our take going into the quarter. We think the application portfolio will do very well. It did well. The database is a complicated problem because a large portion of the database products that are used are by legacy companies, legacy banks, legacy retail, etc. It's not that easy for them to move infrastructure to them because along with the applications come years and years of legacy and page, and that's a very tough thing to the cloud. So I think Oracle will have to figure out an alternative way to push those clients to move some of those products to the cloud. Otherwise, it'll be tougher to report sales, north of 5%, frankly.
So let's talk about the competitors here because they really, Oracle just missed their earnings. This is not the environment where it's kind of okay to do that. What's the take here? How does Oracle size up to their competitors?
See, on the application, I think they're doing okay. I don't have a problem on that side. The tough part is going to be how are they going to, take on the likes of Amazon, Microsoft in the database world, especially because of a large portion of the products that are being built are built on the cloud. And that's where we think we need to be open up a little bit and to work with our cloud providers and their legacy databases. Currently, their latest database product only runs on Oracle Cloud. And I think they may have to show flexibility down the road. They want to accelerate that shift.
Anurag, sit tight because our producers are going to work to try to get you on a better connection. We're having a little bit of trouble hearing you. In the meantime, shares of Oracle are bouncing around, but down about 3% in after-hours trading. Worth revisiting these numbers. Again, the company reporting earnings for the most recent quarter, its fiscal first quarter. The company reporting that adjusted revenue meeting estimates. Adjusted revenue coming in at $9.73 billion, beating estimates of versus estimates, I should say, of $9.77 billion. Oracle shares falling 3% after that earnings report. Oracle maintaining its quarterly dividend at 32 cents a share. Adjusted operating margin coming in at 45%, beating estimates of 42.5%. First quarter adjusted revenue came in at $9.73 billion, once again falling short of those $9.77 billion of estimates. The company is saying that adjusted cloud services license support revenue coming in at $7.37 billion. The company's CEO, Safra Katz, in a statement saying, quote, "Our Q4 performance was absolutely outstanding, with total revenue beating guidance by nearly $200 million and non-GAAP earnings per share beating guidance by 24 cents. Anurag, you're back with us. What do you make of what the company is saying about the remainder of the year, or I should say the remainder of the calendar year and the fiscal year?
See, I think, as I said, moving the growth rate 1 or 2% is not going to really do the needle for Oracle in the long run. They need to do something more dramatic, like moving a large portion of their, database clients to the cloud. In the application side, they're doing okay, and that the momentum should continue in our view. It's really the first area where they need to figure out how to accelerate that shift.
I want to ask you also about just kind of the supply chain issues that we're talking about here, because this is something that has affected a lot of tech companies around the world. Is Oracle facing any of those issues?
They do have a hardware portfolio that does get impacted by things like this, but frankly, their bigger issue is not so much the hardware revenue, which is a small portion compared to the total revenue of the company. It's really the database part of it, which is a large portion of their revenue.
Anurag Rana, Senior Software and IT Services Analyst at Bloomberg Intelligence. He joins us on the phone from Chicago. Anurag, we're going to let you get back to writing your report and detailing these most recent earnings for Oracle. Shares of Oracle, by the way, down just about 2.5%, so off the lows in after-hours trading as consumers look for more detail when it comes to commentary from the company. This is Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenovec and Kriti Gupta live in the Bloomberg Interactive Broker Studio in New York. Walmart and a press release distributor are investigating a hoax tying the retailer to a supposed cryptocurrency deal after an announcement later determined to be false caused a short-lived surge in Litecoin through a highly unregulated market. We're going to be talking all about this, plus the more when it comes to the latest in crypto in just a few minutes. In the meantime, a check of the trading day in business news with Charlie Pellet.
Hi, thank you very much for keeping an eye on Oracle shares after hours. Oracle is declining after reporting sales that fell short of analyst estimates, with growth of a key business application for the cloud slowing from the previous quarter. Turned out to be an up day for the S&P 500 index stocks, snapping a 5-day slide. Stocks were down every single day last week. Energy companies led the gains as crude oil extended a rally to a 6-week high. Let's begin with crude up 1.4%, back above $70 a barrel, $70.70 right now. WTI up by $1 today, a gain of 1.4%. Spot gold up 0.3%, $17.93 the ounce. West Texas Intermediate crude oil today, as I mentioned, higher. We had the 10-year up 4.30 seconds, 10-year yield 1.32%. S&P up 10, a gain of 0.2%. The Dow up 261, up 0.8. Nasdaq down 9, a drop there of 0.1%. As for the market backdrop, Ross Gerber is the president, CEO, and co-founder of Gerber Kawasaki. He was our guest right here on Bloomberg Business Week.
I would argue that investors have a level of safety they've never had before in the history of markets when the Federal Reserve is also out as one of their mandates to protect the stock market. So they don't say it, but that's what they're doing. So how bad of a bear market are we really going to get before the Fed comes in and starts buying stocks or whatever, you know?
And again, recapping, S&P 500 index did advance, snapping a losing streak up today by 10 points, a gain of 0.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Walmart and a press release distributor are investigating a hoax tying the retailer to a supposed cryptocurrency deal after an announcement later determined to be false caused a short-lived surge in Litecoin through a highly unregulated market. According to the release on Globe Newswire at 9:30, Walmart would start letting its customers pay with Litecoin, a relatively obscure instrument that isn't even among the top 10 cryptocurrencies. That's according to CoinMarketCap.com. Well, let's get into it with Brad Scrivener, Chief Executive Officer at Vast Bank, joining us on the phone from Tulsa, Oklahoma. Vast Bank is the first bank in the country to offer crypto banking. Brad, it's great to have you on the show. What went through your mind this morning when you saw this news, later determined to be false?
Well, certainly whenever we see something like that, and thanks for having me on the show, Tim. I really appreciate being on right now. But, you know, when you see things like that, you know that crypto has certainly arrived, right? I mean, for it to pop up on the headlines like that. And, you know, we are a national bank. We're highly regulated. We're going to do the right things. And, you know, for us, I feel good to be positioned where we are. And knowing that, like I said, we're going to do the right things when it comes to the crypto markets.
But I do, Brad, wonder if it, you know, there's this fight for legitimacy, I think, when it comes to the crypto community. And correct me if I'm wrong, but it certainly seems like that fight is continuing. And I'm wondering if this type of thing sets that fight for legitimacy back.
You know, I think you're hitting on a really key point here, and some of the research shows this, right? There are those crypto curious out there. There are those institutions out there, and what they're looking for is some certainty. They're looking for the things that here in the United States that we have, which is, you know, a legal way to participate in these types of things. So that's why, as a national bank, I think this is a really good thing. Those folks that are crypto curious, they would like to participate, but they're just not going to go out there and open up an account with someone that they may not know. You know, we've been around for 39 years. highly regulated from the Office of the Comptroller of the Currency. And I think it's things like that that are going to give institutions and individuals greater confidence to be able to come into the market to the extent that they want to.
Well, Brad, that's interesting that you mentioned that there is this kind of desire for people to use this more broadly, but what's it going to take to get that kind of normalcy that perhaps the dollar, that gold, that other currencies really have here at a time when you do actually have some major companies, PayPal, Venmo, Tesla, that have come out and actually supported the currency. Overstock is another one. So what is it going to take? Who do you need the bid from?
Well, judging from the reaction that we've had since our announcement, as the first national bank to come out with this capability to purchase directly from your account, okay, up to 8 current cryptocurrencies. So I think folks are out there looking for certainty. And we had people contacting us saying, hey, we want to participate, but we were waiting for a national bank to get involved because there's this expectation that we are highly regulated. We do have people that are reviewing us regularly, and in terms of our regulators. So I think this is a really, really good first step. And when the OCC came out with the interpretive letter that said that this was an acceptable activity, meaning custody of crypto assets, that was a really good first step. And I think it's good for our country to bring this into a regulated manner, and people will have greater confidence.
Brad, let me follow that up with asking about the bank specifically. How exposed is the bank specifically to crypto as opposed to simply through your clients?
Well, when you say exposed to crypto, we do not bring on crypto assets directly onto our balance sheet. So there would be no exposure in terms of safety and soundness like that. I've used this analogy before. Think about what's going on like a safe deposit box, right? Everybody's familiar with that inside of your bank. Well, that's the equivalent of like the digital wallet. And those digital currencies inside of that safe deposit box are yours, just like if you are storing, jewelry or whatever the case may be inside of a safe deposit box. So the value of that going up and down, that is the customer's responsibility to understand those pieces. But the bank directly is not exposed to that volatility.
Brad Scribner, we're gonna take a break, but sit tight because in just a few minutes we're gonna come back and chat more about Vast Bank and what you guys are doing, becoming the first bank in the country to offer crypto banking. Brad Scribner is CEO of Vast Bank. He joins us on the phone from Tulsa, Oklahoma. Well, let's head down to Washington, D.C. now, where Nancy Lyons is joining us for an update on everything happening in world and national news. Hey there, Nance.
Hey, Tim. Secretary of State Antony Blinken has been defending the U.S. withdrawal from Afghanistan. Testifying at a House hearing today, Blinken says it was time to end America's longest war. He also is defending the way the withdrawal was handled.
The evacuation itself was an extraordinary effort under the most difficult conditions imaginable by our diplomats, by our military, by our intelligence professionals.
Blinken says the U.S. had reached out to Americans at least 19 times since March, and he says those outreach efforts are continuing for the remaining 100 or so Americans still in Afghanistan. A vote is expected this week in the House Ways and Means Committee on tax proposals to help pay for Democrats' spending agenda. Bloomberg's Washington correspondent Joe Matthew provides some of the details.
We've got a higher corporate tax rate, 26.5%, higher capital gains tax rate, 25%. Both are below what President Biden asked for. But the Ways and Means Committee also added some things that he didn't ask for, like a 3% surcharge on people making more than $5 million a year. That would generate some $127 billion.
You can hear more from Joe Matthew coming up on Bloomberg Sound On at the top of the hour. Tropical storm Nicholas is strengthening just off the Texas coast and could blow ashore in Texas tonight as a hurricane, as it brings heavy rain and floods to coastal areas from Mexico to storm-battered Louisiana. Forecasters say up to 20 inches of rain could drench the Gulf Coast. including the same area that was hit by Hurricane Harvey back in 2017. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons, Tim Stenovec, and Kriti Gupta live in the Bloomberg Interactive Broker Studio in New York. We are talking crypto, and in just a few minutes, we're going to be talking more with Brad Scrivener, CEO at Vast Bank. Joining us from Tulsa, Oklahoma, Vast Bank, the first bank in the country to offer crypto banking. Well, we're also keeping an eye on among the most read stories on the Bloomberg terminal has to do with taxes in crypto. House Democrats' tax plan, which we spoke about a little earlier in the context of the SALT deduction and also when it comes to corporate tax rates, has hit crypto with new rules again, Kriti. For the second time in a month, the cryptocurrency industry is staring down the barrel of a change in U.S. tax provisions meant to raise billions of dollars.
Yeah, $16 billion to be very specific. I mean, this is huge when it comes to getting more of that tax revenue, and at a time when a lot of fiscal money is being spent on infrastructure, on dealing with kind of the COVID situation. So this is an interesting take, and it's not just cryptocurrencies. You have commodities and
okay, traders. As you can see, Canadian dollar moved down, and we need to place an order to sell if the price will move, change direction, yes, and will start moving higher. So what I'm going to do, I will place an order to, if anything will happen, to sell Canadian dollar at 126.49.1. It will give us 5 pips, and in our case, it will give us 500 pounds in profit. Okay, guys, if you manage, let's see, it was like half a day. Yeah, we sold short, well, at 5 o'clock, 5:40. So right now in UK time, what, 21:44. So if it will, it's look like it changing direction. So if it will change direction and we will fill this order, we will close at 126.49.1. Okay, guys. So all of you guys who copy this trade, who trade in Canadian dollar, please place your order to sell your short position. I'll speak to you later, guys.
a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Oracle shares down now by 3.1%. It reported sales that fell short of analyst estimates, with growth of a key business application for the cloud slowing from the previous quarter. Again, Oracle after earnings, after hours, down now by about 3%. Intuit, the maker of TurboTax and QuickBooks software, has agreed to buy privately held email marketing firm MailChimp for $12 billion in cash and stock. An update on Wall Street. Stocks snapped a 5-day slide, with energy companies leading gains in the S&P 500 index. Crude oil extended a rally to a 6-week high. Today, the S&P up 10, a gain of 0.2%. The Dow up 261, up 0.8, while NASDAQ fell 9, a drop of about 0.1%. 10-year up 5/30 seconds, 10-year yield 1.32%. Gold up 0.3%, up $5 the ounce at $17.93. And West Texas Intermediate crude up 1.4%, $70.71 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Let's get right back to Brad Scribner, CEO at Vast Bank. Vast Bank, the first bank in the country to offer crypto banking. Brad joins us on the phone from Tulsa, Oklahoma. Brad, I'm wondering, this is the bank has been around since 1982, so it's not new, even though many people listening right now probably haven't heard of it because it is a local bank. I'm wondering, as the CEO of the company, how you're thinking about turning this bank's local profile into a national profile as you adopt cryptocurrency.
Yeah, so we're a family-owned bank, like you say, been around 39 years. And at the end of the day, we know customer preferences have continued to change. Technology has changed rapidly. So we knew we needed to be able to remain relevant to those ever-changing customer needs. And we had a partnership that we put in place starting in 2018 with SAP. So we became the first bank in the country to do the SAP banking services starting then. And then in 2020, when Mr. Brooks and the OCC made the announcement that under our charter, national banks could custody crypto assets, we were positioned with a technology stack that enabled us to pivot and then be able to bring forward the custody of these digital assets that we're talking about today.
Well, speaking of those digital assets, I'm wondering right now what portion of your bank is made up of people doing, quote unquote, traditional banking, not involving cryptocurrencies, versus people who do crypto banking.
Yeah, so we've had a really strong uptake. We are in all 50 states in terms of the digital asset side with the bank, also in the territories, Puerto Rico, Guam, and DC. And we've only been at this for 2 weeks. So we feel really good about that. Now, obviously, from a revenue standpoint, the traditional bank still dominates that side of the revenue stream. But we're very pleased with the folks that have come on. And, it's in the app stores right now. So App Store, Google Play, you can go download it and basically within 5 minutes be ready to go.
Where are you seeing the interest coming from geographically here in the U.S.? Where are most people signing up from?
We're California, New York, Texas, Oklahoma. Clearly, that's our backyard. And Florida would be the top 5 from memory right now. We've got a real-time reporting system that shows us as people. In fact, if you guys wanted to sign up right now, I could see it as you came on.
I'm wondering about some other elements of the bank, just as I go through your website here. And when I was preparing for this interview, one thing that stuck out to me was you offer a checking account with 2.05% APY, which is just so much higher than what you see anywhere else right now. Is this completely unrelated to the crypto portion?
Yeah, so if you think about this, we're a bank, right? So you've got a DDA portion, and there are some activities that we want you to participate with that on debit card and those type of things. But when you sign up for this mobile banking or through the mobile banking app, you get access to 8 cryptocurrencies to be able to purchase. So you'll see that right on the mobile app and the ability to do those things. But yes, that, and I'll just remind folks that that's an FDIC portion, insured portion through that deposit account, which everyone is familiar with. And then on the cryptocurrency side, that would be separate from that.
Okay. Well, let's talk a little bit about how you make money and the revenue model here when it comes to the crypto portfolio. You offer 1% trading fees. I'm wondering, is that the way you plan on making money with this account?
Well, yes. Right now, that would be an exchange fee. We partner with Coinbase with the exchange. 1% exchange free USD to those 8 cryptocurrencies. And then down the road, a custodian fee could be put in place. And typically that would be associated with a cold custody, which that's an offline storage solution, just to give larger depositors or larger folks that hold cryptocurrency greater confidence in terms of that holding.
Which cryptocurrencies are you seeing as the most popular in your accounts?
Bitcoin has been the top one, Ethereum, and then Cardano. I believe I heard Litecoin earlier was the the Walmart announcement. That's one of them as well.
Right, the one that didn't end up being. We should note it wasn't a real announcement.
Yeah, that's the fake announcement.
Yeah,
thank you. Right. Yeah. So Filecoin, Orchid, Algorand, and Bitcoin Cash. Those are I think I named the 8.
Is there one I think a lot of people, this is new to a lot of people, and I think a lot of people are asking themselves, wait a minute, is it going to be Bitcoin that's the cryptocurrency that sticks? Is it going to be one of the altcoins? Where do you fall on that debate?
I try not to follow anywhere on that debate. The way I view it is that it's the customers that determine the value and the coins that are valuable to them. Our job as the bank is the safekeeper, the custodian. We follow their instructions. And these are things that banks have done for centuries for customers, and we believe that national banks are uniquely positioned to be able to do. And as people are learning about this, there are certainly opinions that people have in terms of which coin may be a greater store of value, which coins are going to be more likely to help facilitate payments or transfer or those type of things. And then, like every market and every asset, there's always speculators who are coming in and trying to understand and take advantage of certain market dynamics to be able to have a quick profit.
Brad Scribner, we're going to have to leave it there. Brad is CEO at Vast Bank, joins us on the phone from Tulsa, Oklahoma. Vast Bank, the first bank in the country to offer crypto banking. Brad, thank you so much for taking the time. You did hear us earlier talking about the hoax press release that went across the Globe Newswire this morning, mentioning a Litecoin and Walmart partnership that ultimately turned out not to be true. The Litecoin founder, Charlie Lee, is coming up in just a few minutes on Bloomberg Technology on Bloomberg TV. Well, let's get down to Washington, D.C. and check in with Joe Matthew, the host of Sound On, also coming up at 5 p.m. Wall Street time on Bloomberg Radio. Joe, what do you have planned for the show this afternoon?
Tim, how's it going? A new day and a new week and a whole bunch of new information on taxes specifically, but it's all to help pay for the reconciliation bill we've been talking about a lot. We're going to get into it with Bloomberg tax reporter Allison Verspro, and we'll talk about it with Congressman French Hill straight ahead on Sound On.
Looking forward to that one very much. That's Sound On with Joe Matthew, airing in just a few minutes, 5 p.m. Wall Street time on Bloomberg Radio. That's going to do it for Bloomberg Business Week Radio. Join us tomorrow, same time, same place for Bloomberg Business Week. This is Bloomberg Radio.
collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Walmart roped into a crypto hoax. A release claims the massive retailer will start accepting the cryptocurrency Litecoin as a form of payment. Only problem, the release was fake. The founder of Litecoin will join us exclusively to tell us his side of the story. Plus, Epic appeals on the back of a massive verdict in its case against Apple. So, what's round two for the game maker versus the iPhone maker? We'll chart the long legal road ahead. This on the eve of Apple unveiling its next generation of iPhones, watches, and maybe even some new AirPods and iPads. Who else but our own Mark Gurman will raise the curtain on Apple's virtual event on Tuesday. We're going to get to all of that in a moment, but first let's get a look at the markets this Monday. Lots to talk about with our Bloomberg's Kriti Gupta. Kriti, take it away.
Well, Emily, a little bit of a choppy session. You didn't really see tech lead the index higher, although this was the first positive session for the S&P 500 in 6 down days, so pretty significant. Of course, tech not really getting in on that, and you of course saw Chinese stocks as well. Now, once again, not getting in on that. I really want to broaden this out though and show you what drawdowns look like, because one of the big concerns here is that we are in the month of September. So September is really known for seasonality, known for its pullbacks, and yet we haven't seen one for a really long time, no more than about 3%. And still, even after last week's sell-off, you only saw a less than 2% decline. Question is, can you start to maintain that upward momentum that we saw today? I do, of course, want to end with some of that risk sentiment really showing up in cryptocurrencies, because intraday, you really saw the Bloomberg Galaxy Crypto Index down on the day. The exception, with all the cryptocurrencies being lower, was, of course, Litecoin, and that just a touch higher, Emily.
All right, Kriti, thanks so much for that roundup. I do want to get more on that hoax that sent a shudder through crypto markets. It all started early Monday when a press statement was released saying that Walmart was about to start letting its customers use the cryptocurrency Litecoin as a form of payment. Bloomberg has previously reported that the retailer advertised a job opening to develop a blockchain strategy, but it soon became apparent that the release was a hoax, with both Walmart and Litecoin denying the tie-up, but not before Litecoin retweeted and subsequently deleted the fake release itself. In its place, Litecoin wrote, the Litecoin Foundation has not entered a partnership with Walmart. Joining us now exclusively, Litecoin founder and Litecoin Foundation Managing Director, Charlie Lee. Charlie, thank you so much for joining us. Look, what happened here in your perspective?
Well, what happened was this morning I woke up and found out that Walmart is accepting Litecoin. And I was like, wow, that's awesome. And that turned out to be fake. So we didn't have a partnership. The thing is, with Litecoin, a decentralized cryptocurrency, anyone can really start supporting it and accepting it without talking to me or without going through the Litecoin Foundation. So what happened was this news got released by Global Newswire and Reuters. And one of our social media guys saw it and actually thought it was true because it was reported by Reuters. And he retweeted it, and then 15 minutes later, he immediately saw that it was a fake news, so he deleted that tweet.
Now, are there any efforts to make whoever is behind this accountable? Like, if this was a pump and dump effort, can you track who's behind this, or somehow track the trader who was involved?
Okay, traders, what I'm planning, want to do with Canadian dollar, I want to sell it. So I will hold it overnight with open stop at 126.49.1. Okay, if overnight position will be closed, we will collect profit and I will publish tomorrow of profit. Okay, if it will move lower, tomorrow I will change our stop to another position, probably to another 5 pips. Okay, guys, stay safe. I'll speak to you later, and have a nice evening. And I'll see you all, speak to you all tomorrow. Okay, guys. Bye bye. See ya.
It's fake news. To those who might suspect someone on your end is responsible, what would you say?
I mean, it's definitely not anyone on